Saturday, June 11th, and this is your daily financial news. I was looking for there it is. I found it. I almost thought I forgot my notes. That would have been embarrassing. Anyways, today is Saturday, June 11th. I hope you're having a wonderful weekend. Remember, at 8 a.m., we will be going live for an hour of Q&A. If you have a question and you'd like me to give it a shot, I suggest joining early. The last month or so, I have failed to answer each and all questions because at 9 o'clock, I go over to our private Facebook group. So if you want to ask me a question, get in early. I will see you at 8 o'clock right here on this channel. A couple of quick things to take a look at. First, $5 gas. National average, $5. First time that has ever happened. We are increasingly, or at least I am increasingly seeing $7 gas here in California. This is after an 8.6 CPI reading yesterday. I have not come to grips with what CPI might be next month. I'm going to take my victory lap for a little while before I call next month. But yeah, gas is changing consumer behavior. And if you watched our last Saturday session when we talked about the week ahead, CPI was obviously the important number, but there was a second, and any other day would have been the most important data, consumer sentiment. It came out about an hour after the CPI reading, and almost no one talked about it. It is very, very, very important. Why? Because it tracks the consumer. The consumer, folks, again, what have I been tracking for 30 years? If you break it down to one thing, it is the consumer. They are the economy. They are pissed off. They are scared. They are changing behavior right now. We saw a consumer sentiment reading that we have never seen before. This survey is not a 5-minute, a 5-year, or even 50-year survey. It is 52 years old. This survey goes through the oil embargoes of the 70s. It goes through Black Monday. It goes through 20% Fed funds rate. It goes through the dot-com crash. It goes through the Great Recession. It goes through the pandemic. We have never seen consumer sentiment this low. It came in at 50.2. Expectations were 57. The consumer right now is changing everything. I had originally called for a recession next year. I do not feel good about that call. I'm not changing it. I made the call months ago. I'm going to stick to it. But with a consumer sentiment reading at 50.2, lowest on record, I'm not feeling very good about that. The consumer is retreating. Not a lot of stuff going on. And we have yet to have mass earnings cut, which is going to take the stock market lower. We have yet to see unemployment spike, which is going to happen. We don't know if we have peak inflation. We're seeing a crash in real estate inventory. We have FOMO over here. Folks, winter is no longer coming. It is here. This is going to be an event in our adult lives that we remember and talk about for decades. The next 2 years, as I've said for a while now, are going to be yucky. That is a technical term in case you are wondering, yucky. So consumer sentiment, bad. If you go back and watch last Saturday when I talked about the week ahead, I assumed consumer sentiment would be bad. I even said it would be worse than expected. I did not expect 50.2 bad. I expected like 54, 55. 50.2, once again, worst on record. The Fed's got to pay attention. Our leadership's got to pay attention. Yeah, not good, not good. The week ahead, what do we got next week? Well, all eyes will be on Wednesday. Wednesday is when the Fed comes out with their Fed rate rise. We're going to talk about Wednesday in two ways. We're going to talk about what I think they will do, and we're going to talk about what I think they should do. Okay? So what do I expect them to do? I expect them to give us the 50 basis point raise that they promised. I expect them to say they are disappointed and all this other nonsense, which means nothing to people who can't put food or gas in their tank, or food in their fridge, gas in their tank. They're going to talk about a commitment to beating inflation. They probably will talk about 50 basis points coming. I expect them to potentially talk about, we are willing to do 50 basis points the rest of the year. That's what I expect them to do. What should they do? I think they need to get off their ass. I think they need to shock the system. I think the first thing they should do is they should do 75 Wednesday. Why? Because if you watch my channel, you know that I believe that first move of a quarter was the wrong move. I had called a half and I was wrong. They did a quarter. I think they could easily say something like, hey, we now realize that their quarter point was a mistake. We want to make up for that. And then we will be on the path for 50s going forward. They could do that. Second, they need to totally rug pull the market. I understand that this will hurt asset prices in the short term. But if you look at the folks that own stocks, it's relatively speaking a small percentage. And as long as you don't sell, obviously, you don't actually recognize a loss. But folks, we're losing 60% of our economy that is increasingly doesn't have emergency savings, doesn't have discretionary. We problem. This is like real problems. So I realize, talking on a financial channel, this will hurt a lot of us. But the Fed's got to Paul Volcker this thing. And what do I think Paul Volcker did? Is he raised on weekends, he raised back to back, he surprised, he did 100-point. That's what they should do. I do not believe anybody other than maybe James Bullard has the cojones to even talk about this. So again, I expect them to give us a song and dance. Here's a 50. We're going to give you some more 50s. Week. And you already know what I think they should do. So moving forward, Coinbase. Man, we have seen the Silicon Valley change overnight. I think we talked about this yesterday. It might have been the day before. Well, Silicon Valley CEOs have had enough of the whining and crying from their employee base. Apparently at Coinbase, there's been this super secret internal petition to fire 3 executives. And it's apparently been signed by lots of people. CEO of Coinbase says, if you don't believe in our executives, quit. Leave the company. Stop whining. Do your freaking job. I agree. You don't like us? Leave. I mean, what's he supposed to say? Oh, we're going to fire 3 senior executives because all these people signed a petition? Man, what's the world come to? I tell you. Big landlords. One of the reasons I'm not calling for a housing crash in prices is because there are more and more buyers for affordable homes. Build for rent has gone from 2.7% of the market to 5% and likely going up from here. That is percent of inventory built. So 1 in 20 homes goes into a rental pool. American Homes for Rent has built 100 communities in the last 5 years that are entirely rent-based. This is a growing trend. Builders will retreat and they may diversify and build for other buyers. If you've been watching my channel, I think it was 6, it might have been 9 months ago, we talked about a community in Texas where the home builder made more money and sold it faster, making it a rental community. Luxury homes are plunging. Folks, they are plunging, crashing in transactions, not in price. Remember, I believe there is a transaction crash happening right now. It is not price. I did a video this morning that I thought was really fun and entertaining, talking about the last 10 years of housing crash calls. It's like, really? The broken clock's not even been right twice. Luxury home sales have fallen 18% transactions. I don't know about you, but I do not know what they call luxury, so I looked it up. Apparently, what they did is they found the top 5% of listings in the top 50 markets. So the top 5% of homes priced in the top 50 largest markets. I think that's a decent call for luxury. Transactions down 18%. Prices up 19.8%. Can't make this stuff up. It's kind of fun. All right, what else do we got? Oh, one more thing. Oh, I already did that. National home sales plunge. So what else do we got? The week ahead, Monday, Oracle announces. It'll be very interesting to see what is going on with Oracle as they transition out of ERP to more cloud-based software. It'll be interesting. Tuesday, the Fed meeting begins. Wednesday, the Fed decision. That is the big day of the week. Wednesday. I think they give us a half. They should give us 3/4. We'll see what happens. We also get retail sales Wednesday. Wednesday's going to be a big day. Are we going to be able to tie a 50.2 consumer sentiment with retail sales? Remember, the consumer is a fickle creature. We can feel bad and still shop till we drop. We can still buy now, pay later. We can still rip out our credit cards. We can still YOLO summer vacations. I don't know. 50.2, never been that low in 52 years. Retail sales Wednesday, I think retail sales disappoint. We also will get a home builder survey. If we don't get a home builder survey that is record low, I'm not sure what they're doing, but we'll also get that. Thursday, we have Adobe, Kroger, and housing starts. Kroger, grocery store, what is going on there? Inflation, shipping, all of that. Adobe, what is going on with cloud-based, the revenue stream, things of that nature. And then Friday, Jerome Powell speaks for the first time after the Fed meeting. He often drops things that are interesting and noteworthy. Any other things? Oh, Tesla. Tesla files for a 3-for-1 stock split. So if you want to buy Tesla cheaper, wait for the stock split. Technically, it's the price is cheaper, but you know what it is, right? Stock splits are more slices, same pizza, but there you go. I do believe that we are going to start hearing about yield curve inversion. I brought you that yesterday. No one has talked about it yet. I suspect yield curve inversion. It could be a topic by next Friday. The 2-year spiked to over 3.1. The 10-year went to 3.25. It is a very close gap and getting closer. Watch for yield curve inversions. The inflation is 40-year high. The Fed is behind the curve. They are late. They are weak. What are they going to do? Next week is important. I believe the Fed must punish asset prices. They must show they're in charge. They must do something unexpected. The Fed has adopted a strategy of tell the market what to expect so the market could adjust. Stop it. Kick the market in the nuts. We need to see that you're serious and you are in charge. Right now, you are weak and late and wrong. Own it and change. Anyways, folks, we'll see you in a few minutes for our live Q&A. It is always a fun hour. I hope to see you there. Take care. Bye.